So today we're going to talk about the Insurance Contracts Amendment Act, which basically introduces the most significant changes to the Insurance Contracts Act, which is the main piece of legislation that you all need to focus on since its introduction in 1986. We'll be covering the general insurance specific changes, and the impact of the changes will differ depending on your role, whether you're acting as agent for the client in the traditional broking capacity, or in some cases where you may be acting as agent for the insurer. You'll all know that under the Insurance Contracts Act, the insured and insurer both owe each other the duty to act with the utmost good faith towards each other. And a breach of that duty by the insurer gives the insured a right to damages, which is a pretty significant thing. There have been a number of important changes. The most important is really that third-party beneficiaries are now subject to the duty in addition to the contracting insured. A third-party beneficiary is a person who's not a party to the contract but has a right to claim under the contract because they're specified as able to make a claim or entitled to a benefit under the policy. So they now are able to access the duty of utmost good faith. So when you're acting for a third-party beneficiary, this is a very important thing to remember, and it's a good tool in any claims type negotiations. From the insurer's perspective as well, the main change is that a breach of the duty is now a breach of the Act as well. It doesn't give rise to any penalty, but it allows ASIC to bring a representative action and other things like that against the insurer. So it's a big disincentive for an insurer to breach this duty. The next exciting topic is electronic communication. There's been a bit of debate for a while in the market as to whether or not insurers were permitted to deliver notices electronically or not. The government's put the issue to rest and they say you can. So actually since December last year, insurers have been able to provide any notices under the Act in electronic form. They do require the insured's consent to it. From an insurance broker's perspective, most insurer notices don't apply where a broker is acting as agent of the client by reason of Section 71, other than the renewal notice required under Section 58. So really, as insurance brokers, if insurers are continuing to provide electronic notices and you've given consent to that as agent of the client, generally it's business as per usual. If insurers want to start sending you electronic notices, you need to have a think about how that impacts on your system and procedures to make sure you and your clients are appropriately protected. And obviously if you're an insurer or their agent wanting to take advantage of the probably financial savings involved, you need to make sure you put in place the right processes.